What are the best stocks for options trading? So this is a really good question. What are the best stocks for options trading? Generally when we approach a question like this, we're thinking about it from the point of view of a particular strategy. Something like, what are the best stocks for options trading in credit spreads or in debit spreads, or maybe no spreads at all, just what are the best stocks for options trading in a day trade? But really, there's some crossovers to all of that. And so if we really just approach it by what are the best options to trade, we can find those stocks that have the best options. One way to approach it is to think about what makes options good. We want a liquid options market, just like when we're trading stock, and we want to see that a stock is heavily traded, that it has a lot of stock volume. In the options world, it's the same thing. We want to see a lot of options volume. Now that can be a little tricky because options are sold to open just as much as they're bought to open. So if we're just looking at how many times it was bought, that wouldn't really give us the kind of information we need. But if we look at it overall as how many transactions were there and how many options are still being held as part of a trade, what we would consider open interest, then we can get a better idea of how liquid a stock is in its options marketplace. So what are the best stocks? We would want stocks that exhibit a history of having a very liquid options market. We want to see that they also have a good shares market, that they're really liquid in the share volume on a day-to-day basis. We also want to make sure that they have a low bid-ask spread in the options chain. We want to see that there's a lot of strikes to choose from, and we want to see that they have a narrow strike gap, which I will demonstrate that in the options chain in just a moment. We want to see that they have a low split history or reverse split history. Some companies do reverse splits and they do split. Even good companies like Apple has split stock. But we want to make sure that it's not one of those companies that deliberately pumps its stock price and then cuts it, splits it down to low levels and starts all over again with this pump and dump scheme. And a market that has a history of consecutively and consistently splitting their stock price or reverse splitting their stock is a company to avoid when it comes to options. We want to look at a chart that has really clean price action. We don't want to see a chart with a lot of unexplained, very large, massive gaps or big parabolic runaway markets. Those are markets to stay away from when it comes to the options trading. So no unexplained gaps, no big parabolic moves. And it's always best to avoid companies that have recently been purchased or are in the news as possible candidates to be purchased. So for an example, if X Steel right now currently has had some discussions about being bought out. If I was looking for the best stocks to trade options on, it wouldn't be a company that might soon be bought by another company. So let's kind of go through some of these things and see them and discuss them. Right now, we're looking at Apple. I would believe that everybody would look at this and see a relatively good, clean chart. But I'm sure we've all heard about GameStop, right? So if we go and we look at GameStop, maybe we have to open the chart up to a few years back so that we can all remember what it looked like during the Wall Street bets attack that was going on back in the day. This would be a great example of what you don't want to see. So if we're looking for the best stocks for options trading, and this is what I found on the stock chart, I wouldn't want to approach this for options trading. Notice also while we're at it, the elevated implied volatility. There's some times when Wall Street knows what's going on, but hasn't really hit the news yet, and the options will get heavily juiced in implied volatility. So if you come across a chart and the implied volatility is just really, really high and you can't see any news or any reason why it should be that high, then we would want to avoid that as well. So this is what the chart would look like. Now we talked about liquid options. We can use a benchmark for liquidity and just consider that SPY is the most liquid thing that you could ever trade consistently. Now, sure, from time to time, you may find that a company traded with more options volume on the day. It's absolutely possible. But consistently, day after day, week after week, month after month, year over year, SPY, hands down, is the most liquid product that you could ever find in the options market. So this would be your highest regard. Nothing would ever compare to this, but you can always gauge other markets to Apple. So on a day-to-day basis, here's just a random day in the market. We had 0.9 million calls traded and 0.5 million puts traded for a total of 0.5 million options traded today. And you know what the crazy thing is? That's down on the day. That's half of what it normally trades. Can you believe it? Less than half, honestly. So on a normal day-to-day basis in SPY, we should be looking at nothing shy of 20 million contracts traded a day. That is wild, right? 20 million contracts a day. Now, like I said, that is the higher end, but we can always use that for a gauge. Another very liquid, very popular options trading company would be Apple, with a total of 88,000, or Microsoft, not even 300,000. Tesla, 2.2 million. So not bad, right? We can look at the Qs, 4.3 million. So as you can see, this is what a liquid market looks like, right? But we can't compare everything to Apple and Microsoft and the Qs and Tesla. That just wouldn't be fair. We still need a way to gauge what looks like and is it liquid enough. So we have what's considered a really nice lean-to when it comes to liquidity, and that would be the bid-ask spread. If the bid-ask spread is relatively tight, maybe 2 or 3 pennies, then it's not too bad. But we say that, but we haven't even talked about the stock price. The Qs, for an example, are $355, and they've got a 5-penny wide bid-ask spread at the money. Okay, I mean, that's not bad. That's $5 to slip in, get in, $5 to slip and get out. Not too bad. You take something, say, like Tesla. We know that Tesla had a lot of options traded today. We'll go at the money. And this is a 20-cent wide. That's pretty good. That's pretty good as in a good example of market that isn't so liquid, right? That's a reasonably wide bid-ask spread there. 20 cents, maybe a little more than that. 25. On the put side, we got 35-cent wide bid-ask spread on a $15 stock. But we could also argue that it is liquid. We can see thousands of contracts traded today. And if we look at the open interest on some of these, then we can see that there were thousands being held. Right now, I'm going to argue that these are probably a newer strike, that they had $5 wide strikes until today. And then today, they added in $2.50 wide strikes. And that's the width that I was talking about earlier when I said we wanted to see a narrow strike gap. In a very liquid market, we'll see a $1 wide strike gap, something like, say, SPY here. It goes from 420, 421, 422, 423. It's a very liquid market. And so we have strikes at each dollar increment. Now, sure, even in SPY, if we go far enough out in time, we might start to run into $5 wide strikes. Here at 343 days out, we've still got $1 wide strikes, which is just fantastic, right? This is a great example of liquidity. So it can't be summed up when we talk about liquidity as just being the bid-ask spread or a lot of strikes or a lot of open interest. We still have to consider the dollar value between the bid and the ask versus what the cost of the company is. There's no perfect answer to this, but we want to find a company that has a history of being very liquid. And there's nothing that can tell us about liquidity more than the daily options volume being traded. So if we look at SPY, for an example, and we look at the options statistics today, I mentioned that 1,500,000 is about half of the 5-day average. Well, I'm only now mentioning the 5-day average, but half of the average. how did I know what the average volume was? Well, the sizzle index, which is the call sizzle and the put sizzle combined, is showing that today's options total average volume came in at 0.5. That's half of the average. Average would be 1.0. So if 9.5 is half the average, then double it, and we're getting closer to the daily average. That is the 5-day average, but it's still the average right now. So knowing that, what are the best stocks to trade in options trading? It would be highly liquid options market. The really cool thing is we can scan for that and we can build a watch list, which I'm just going to do now. Step one would be to reset your scanner, make sure that it's completely empty of anything that you've done before. Second, we want to scan in weekly options. A market earns the right to have weekly options. If it's not liquid enough, it won't get options on a weekly schedule, right? So that's a good step. Once we've got liquid options, another thing that you can do to build this scan, and you want to do it after the market is closed. You don't want to do it early in the morning or first thing in the morning when the market opens, because you need today's volume, all of today's volume, to get a feel for how stocks traded today in their options market. And then we'll go in here and we'll add a filter, go to options, and we're going to use volume. Really simple, really easy. What's the minimum volume? Well, we just looked at a couple of things, right? We looked at SPY, and we know that SPY's average daily volume is above 15 million contracts per day. So that's a little on the extreme side. We looked at Tesla and it was over 2 million contracts. And we looked at Apple and it didn't even have 1 million contracts traded today. So let's start with 500,000 as a good starting point. That's the minimum side. We don't want to put a maximum number on here. Liquidity really is key to the whole thing. So real quick, one more rundown. You want highly liquid options that also have stocks that also have a high share volume. They have a low bid-ask spread in the options pricing. There's a lot of strikes to choose from. They have a narrow strike gap. They have a history of not splitting too often or reverse splitting too often. They have a clean chart with reasonably decent price action, no unexplained, strange, big gaps, no parabolic moves, and they are not in the news for a takeover bid or being bought by another company, or even maybe potentially buying another company, right? If the market you're getting ready to trade is in the news because it's thinking about buying another company, that's going to greatly affect something in the options world, right? And we're not always quite sure what that's going to be. And so there's a video we're going to be coming out with that talks about what happens to our options when a company gets reverse split or gets bought by another company. And it's a little bit of a nightmare, right? You get snail mail showing up. There's forms that may need to be filled out. It can get very confusing. So it's just best to avoid the whole thing. And that's it. That is the way to answer this question about what are the best stocks for options trading.